All right, guys, back to work. Boy, fantastic day today. Hope you got some money out of that beautiful bear trap off the low of that trading range. Boy, speaking of trading ranges, we are range bound on the markets right now. And you know me, I love me some range bound markets. There's one specific type of range play I like to look for. I call it the pop and pullback setup. And if we're lucky, that pop and pullback could be a huge payday for us tomorrow. So we'll talk about the pop and pullback in the video tonight. And I'll cover my favorite trades, of course, in the video. That way you guys have a game plan to make some money on Wednesday. Now, before we jump in and get the party going tonight, make sure you subscribe to the channel. That way you don't miss tomorrow night's video. So make sure you subscribe. And if you like the lessons, if you enjoy these videos, do me a favor, will you? Here, please hit that like button for me. Give me a shout out. Give me a holler down in the comment section below. Thank you so much for tuning in, supporting our channel. But enough of the intro, right? Let's get ready for Wednesday. Wednesday is not going to trade itself. Boy, looking at the charts here tonight, lots of ranges on the charts. That makes me pretty happy. I love range bound markets. As you can see right now, got the Nasdaq and the triple Qs. I got the E-mini and the SPY. I like to start off on the 60-minute time frame to plan my trades for the following day tonight. And then later on in the video, I'm going to drill down to some tick charts. Tick charts are where we get the entry timing clues we need to make money in our trade room tomorrow morning. So we'll start off on the big picture on the 60-minute, and we'll drill down to some tick charts, some faster time frames, and talk about entry tactics that'll make our job easier here for tomorrow. As you can see in front of you right now, there's no real doubt about this. We are bullish into a trading range, bull bias overall. I like to use the 60-minute to give me the general directional bias. So we're bullish bias overall. And ranges. What do ranges tell us to do? Ranges love to rotate back and forth. So we're buying low, we're selling high, we're trading breakouts, and we're trading lots of fake out breakouts. So a very important clue right now, bullish bias into a trading range. The entry timing though, right? Trying to time the best entries in this environment. We'll take a look at those tick charts here in a moment because that's where the biggest clues are here for tomorrow. Now, speaking of tomorrow, before we dive into tick charts and talk about entry tactics, let's double check the schedule for tomorrow because there are two important news events you want to be aware of. The first one, of course, is that GDP number at 8:30 Eastern Time. The second one is that beige book tomorrow afternoon. Now, I realize the GDP seems like the biggest report here, but I don't think the GDP report is the big news of the day tomorrow. I would assume out of these two news events, that beige book is by far more applicable to the current situation because the markets are obsessed right now for when the Fed may begin to lower rates or cut rates early next year. So because everyone's obsessed with rates right now, I would imagine that beige book is probably the most important news event for the session tomorrow. And that means we pretty much have a wide open session tomorrow after we get through that GDP report at 8:30 Eastern Time. The big news this week comes on Thursday, personal income, Friday, ISM manufacturing, and you could definitely argue that everyone's probably waiting for Jay Powell later on in the week as well. But keep those two items on your list for tomorrow. The GDP, again, at 8:30, that'll get us going. But that 2 p.m. beige book is probably where we'll see some fireworks tomorrow afternoon. Now, back to our charts, right? It's good to know when the news is, but the money is made on the charts. Let's now go over my favorite trades here for tomorrow. As I mentioned earlier, we got ranges on the Nasdaq and ranges on the S&P. Let's start first, though, on the S&P and the SPY, and we'll wrap things up tonight on the Nasdaq and the triple Qs. The S&P is actually quite a bit different than the Nasdaq tonight. So we got some different game plans for the E-mini as opposed to the Nasdaq. Let's now drill down to some tick charts here on the E-mini or the SPY because the real big clues right now are going to be in the tick charts as far as timing the best entries for tomorrow. This, by the way, is a 7,000 tick chart. You can see time frames in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA, just a default 21 EMA, nothing special there on the chart. The tick charts are giving us three important clues. They're tipping us off to where I think the easy money trades are going to be for tomorrow. The first one is this trading range. Nothing new here. We had this range on our radar, right, 24 hours ago. In last night's video, we had that beautiful run down, 1, 2, that bear trap we talked about in last night's video, what do we know about ranges? We know that ranges act like magnets, right? We know that ranges love to rotate back and forth. We want to buy low, sell high, and trade that rotation. That's one very big clue. The second clue is that strong run higher. If you watched last night's video, you know that anytime we see a strong move in one direction, there is a bullseye trying to take out that high. Also, don't forget, we still have that big strong run. That puts around 45.88. So we know the buyers are still trying to punch this thing higher. The third clue, though, might be the most important clue we have on the chart. If you understand that ranges like to rotate, well, what the heck happened here? We had that strong rotation off the low. We talked about this game plan last night on the video. We come crashing back down because it's a range, right? Ranges love to rotate. But wouldn't you think, though, this would have wound up all the way at least down to take out that 47 low? Absolutely, right? So that failed rotation, or at least for now, it's a failed rotation, unless they roll over here overnight. That failed rotation is a very bullish clue in the short term and tells us that a push higher, and this is where that pop and pullback setup I mentioned in the introduction, this is where the pop and pullback comes into play here. So when I look at the chart right now, the first thing that comes to mind is we know where the easy money is, right? The easy money is buying bear traps down below that low. There are three different ways we can trade that. I'm going to talk about that in detail here tonight. A second way to make money in this scenario is to basically trade a breakout pullback, right? Basically trade a breakout going higher. Now, I would love to think we're going to get some big breakout tomorrow. But with that ISM number, with Jerome Powell later on in the week, it's tough to think that until we get some of these big news events, the personal income number on Thursday, until we get those big news events out of our way, it's tough to imagine we're going to see a huge breakout. But that is definitely on my radar for tomorrow. And the third thing is that pop and pullback. That pop and pullback. These are a bit delicate. So I'm going to talk about that in more detail here as we go deeper. Now, if you watched last night's video, you know how to make money down here, right? There are three very easy ways to do it. We talk about bear traps a lot, right? Or failure patterns, we call them in our free video classes. So if we do end up rolling lower overnight, right? Taking out that rotation low, it's kind of the same game plan, right? We use a failure pattern, 1, 2, right? Failure pattern to buy back up. You can see an example right there, right? We use stops as fuel. We trap the bears in and we buy back up again. If that move was to pull back and retest that low, we do it again. We call these double bottom retests, right? 1, 2, and we're buying off that low. So again, we go lower, 1, 2, that 2 try failure, back in. This is basically the same game plan we talked about last night, and it's still a very good game plan as we look into tomorrow. The kind of other variation of that would be a V bottom, right? Sometimes it'll run, it'll pop back up and begin to grind back higher. In those scenarios, you don't chase it. You find that channel, right? Remember that from last night? Off the highs, off the lows. You look left, find those prior swings, and we grab that, as I always say, that first test off the low of that channel. And again, this could be a bear trap like I'm showing you right here. It could be a seller failure pattern below the moving average. Any of the entry patterns you guys are learning in the free video course. So my favorite kind of easy money trade is definitely underneath that range going lower because it's an overall bull bias. But let's talk about right, what I would love to get if we go higher. The most difficult part about this is that as we go higher, if we go higher on the way back to take out that high, the hard part is we are above a trading range. And so we have to think that as the market goes higher, this is not a great place to be a buyer. So what I want to do is as we're going higher on the way up to take out that high, because I don't think there'll be a lot of buyers up there, I'm going to have to use a bear trap to basically trap in the sellers, get them to short this thing, and I'll try to use their stops, right, to fuel it. Now, we talk a lot about this pattern in our free video classes, right? Look at how this pattern sets up. It's a strong move up, a higher high in price, and that's a bear trap underneath that low. Again, we can't expect a lot of buyers up here. So on the way to take out that high, I have to trap those bears in and try to use their stops to fuel that move going higher. Bear traps are critical as we go back up to retest the high. One of my favorite trades, though, for tomorrow is if we can get that strong run up. And again, we may or may not get that bear trap, but once we get that strong run up, I don't want to buy high up here, right? We don't want to buy high. We want to buy as low as we can. Think about that trend line coming up, right, off of that low. What I'd love to do is get this thing to get knocked back, get underneath some of these swings around the top of that, get somewhere around that range, and come in and use the 21 EMA. Get those bears to try a couple times, right, and use their stops and light those stops up to squeeze those bears out. I call this, kind of my nickname for it is a pop and a pullback. It's basically a strong run up. I don't want to buy too high up there, right? But again, because I have that trend line coming up, because we're overall bullish on the higher time frame, I wonder if we can trap some sellers in, use one of those failure patterns. And I'm keeping it simple right now. This may end up becoming a failure and then into another one of those bear traps off of that low, and the target, of course, is to back up to retest the high. All right, so think of this sequence, right? That pop up, but don't buy high. Wait for it to get knocked back down, and then bear trap or a seller failure, right, into an actual trap pattern going higher. Right now, if you're watching for the first time right now, this might be a brand new language for you, right? Bear traps, failures, rotation. What the heck is this guy talking about? But don't you worry. I teach all these patterns and a whole lot more. I have hundreds of examples of these pattern setups on real charts, all included in our free video classes. What I'll do is I'll put a link up here for you in the upper right-hand corner. Grab that link and take that free trading course, because the strategy I teach in that video series will teach you a stupidly simple trick we use in our members trade room to know exactly where the best winning trades are going to be that day. Then I'll teach you 4 of my favorite entry patterns to help you start making money. If you're not making consistent money right now, if you're missing too many good trades each day, if you're trying to qualify for one of those funded accounts at Top Step or Apex, definitely take that free course. It's perfect for someone who needs an easy roadmap to find lots of winning trades each week. So grab the link that popped up there. You will love that free video course. And don't forget too, if you can't grab that link up there, I'll put all the important links, all the details you guys need, the description of the YouTube video, my free video class links, my trade room membership links, and I post a lot on Twitter during the week. If you guys are on Twitter, you'll see my Twitter handle there. Follow me there for updates in between my videos here on the YouTube channel. All right, guys. So that is something I'm looking forward to. So the easy money's down here, right? That's the easy money. As we run higher, think about that pop, that pull back to leverage that trend line. Remember, I'm not a big fan of picking bottoms here, right? So just wait for it to get underneath that moving average. Get those bears trapped in a little bit. Use their stops to fuel this sucker and back up to retest that high. That's that pop and pullback. And the final scenario here is a breakout. Is a breakout. We have a pretty good understanding right now that 97, right? 45.97. You might need to go back to a daily chart on that, because that's a major high from, I want to say, late summer, September, something like that, right? So we know that 97 level is where the market would love to get to. Again, I wouldn't hold your breath on this, but I don't know what tomorrow brings. Nobody knows what tomorrow will bring. I wouldn't expect the big breakout until we hear from Powell, or at least a personal income number on Thursday. But if we were to see a breakout, right, there are 2 breakout patterns I would look for. One is a pop and grind, right? So if we pop up, right, and we start grinding and grinding and grinding, these are easy. Pop and grind. Mark that high, mark that low, and then all you do is look left, Find prior swings. I always love traps, and in my free video course, you'll soon love traps too once you learn they work. I want to get underneath. My kind of favorite entry on this pop and grinds is once I find that channel, I love to get just underneath a prior swing. The moving average will come up. We'll get underneath the moving average. Remember, prior swings are where traps live. The moving average is where a failure pattern will live. Failures will lead into pullbacks, and of course pullbacks lead to strength moves. We call that the price action cycle. You guys are learning that in the free video course. Now remember, know where the market wants to go, right? So the easiest way to make more money in trading is to simply get better at holding on to good trades. So for example, if I can get a trap or a failure or a pullback, I don't know which one I'm going to get tomorrow, right? I'm looking for any of those entry patterns off of that low. The first target is always back up to retest that high. This will take 1/2 of the position from there. Then what I'll do is I'll measure the size of that pop leg. That creates my quarter target, right? Quarter off at the measured move. Okay, you'll learn more about this in the free video course. And the final quarter will be the runner up around that 45.97, right? 45.97. So again, it's half off at the retest of that high, right? The quarter off, remember, think about it, the breakout leg, right? That initial pop leg, I can use that for a target as well. That gives me my second target, right? Quarter off there, right? Quarter off there. I got one last quarter, and we'll see if we can get lucky tomorrow, right? And get that final quarter off up around that 45.97. So keep an eye out for that breakout. The only other breakout pullback, only other break will be a breakout pullback, right? That will require a very strong run higher. It's kind of like a pop and pullback, but in this one, it will be a breakout, right? A pop and pullback, in my kind of definition of a pop and pullback, is we may not have a clear breakout, but we have so much momentum that as it gets knocked back, we're going to probably see more bears get trapped and buy into those stops, right? It'll look a lot like we're seeing right now. So that's kind of a pop and pullback. The breakout pullback is simply a very strong run higher, and then all we do is we try to get that pullback underneath the moving average. We look left, right? We look left, and these areas of resistance, they become levels of support. So now we start looking left, find these areas of support. Now we pop up, we pull back. Again, these would be called breakout pullbacks, right? It's a very clear breakout through that high. It's a very strong run, right? Going higher. And in these situations, what I'll do is I'll go out and look for larger channels, right? And try to get underneath the moving average, right? And get those bears trapped in. Again, in this case, it's called a breakout pullback, right? It's a very strong, convincing break out of that trading range. Then all we do is we simply wait for a deep pullback off the top of that range, right? We'll talk more about that in the NASDAQ here in a moment. All right, guys. So I know this was a pretty lengthy discussion here on the S&P, but I think you can see here there's quite a few, I think, really great setups here on the E-mini. Now we just wait until we get here for tomorrow. How about some NASDAQ? NASDAQ is similar to the S&P, bullish into a trading range right now on the 60-minute. Again, I like to use the 60-minute to give me a directional bias, right? What's the best direction to be trading in right now? But the actual entry tactics I'm going to get off the tick chart. This is a 4,000 tick chart here on the NASDAQ. Right now we have a big old triangle here on this NASDAQ. This would lend credibility to the idea that we're waiting on something, right? They're waiting on something. I would assume it's going to be something later on in the week, that personal income number on Thursday, that ISM number on Friday, or Powell's speech on Friday. So we may be locked in this range here. Triangles are really, really simple. First of all, we know that it's a range, right? Triangles are ranges. And so the most important thing is ranges love to rotate, right? They love to rotate. So we buy low, we sell high, and we try to avoid the middle. The easy money, because I know you guys want easy money. I want easy money. We all want easy money, right? The easy money is around the edges. All right, it's around the edges. So going lower, I want to buy off the edges. Going higher, I want to sell off the edges. Use the range itself as a magnet. Now, this is where the directional bias comes in. So we know we're an overall bull market. So I can be a lot more aggressive buying with failure patterns, right, below that low, whereas I have to be a little more cautious with a crown reversal pattern, shorting off of that high. The mindset that I always have whenever I have a triangle like this is to look for failures at the edges and traps as it rotates. Failures at the edges and traps as it rotates. So, for example, I think the easiest money is to buy below that low right now. I can be a lot more aggressive down here because we're already a bull market. So failure at the edges, right? I'm around the edge of the range. This will be a very bearish move in the short term by the time we get down there. So what I'll do is I won't try to pick the bottom, right? We don't pick tops and bottoms, at least not the way I trade. I find it much easier to find a level I'm interested in, wait for, in this case, the sellers to come in and commit a couple times. Once I've got them committed, now I know where their stops are. Now I know where their pain is. Now I know where my fuel is, right, to run this thing back up into that trading range. So again, that is a failure pattern, right, around the edge. And then as we try to make our way higher, where is the market trying to go? It wants to go back to the other side of this range, right? So as we go higher, this is where we look for traps as it rotates. Remember how these work, right? It's a bear trap in this example. It's a higher high in price, right? And a trap below that low. Again, failure at the edges, traps as it rotates. And like I mentioned earlier on the E-mini, we may run lower, we may pull back and double bottom, right? In fact, I see tons of times in our trade room where we'll get that big move down, we'll get that initial failure pattern, right, coming in, we'll get our 1-to-1 target, right, going higher, but then for whatever reason, because that move lower was so strong, it rolls over, it retests that low, and we simply do it again. We do it again, right? Bears come in. Can we all agree this is a horrible place to be selling? Right? Horrible place to be selling. You're selling at support, below a trading range, in an overall bull market. Anybody who sells short right there deserves to get their number called. They deserve to get their bell rung with that failure, right? A 2-try failure. Then again, if it runs up, right, we then start looking for trap patterns. Failures at the edges, traps as it rotates. Again, failure pattern traps the bears in, use stops as fuel, and then as we go higher, it's that higher high in price. Remember, it's got to be that higher high in price, right? Very, very important for a bear trap entry as we go back up and retest. I like all of these. Same game plan we had last night. We'll continue to kind of milk that cow until something changes. Now, the big difference here is if we go higher. Right? If we go higher, we are a bull market overall. We're not a bear market, right? We're a bull market. So as we go higher here, I have to be prepared for a breakout pullback, right? That's the danger, right? So now this is where that pop and pullback can come in play, right? If we were to see a real strong pop up, a pop and pullback, right, will come into play here. Okay, I'll talk about that here in a moment, all right? Because that's going to be, again, another great option here, the NASDAQ. But to kind of finish my thought before, how would I sell off the high here? It has to be what we call a crown reversal. My goal is to protect myself against that pop and pullback, right? So when I get up here, and this also applies to the S&P as well, I have to, well, first of all, we can't expect a lot of sellers up there because we're so bullish overall. So if I want to be a short seller down up here, I have to trap the buyers in and really lean on their pain to get the fuel. And to do that against the trend, I have to sell as high as I can. buyers once, buyers twice, right? And you always, whenever I'm going against the overall trend, I know it's a range, but we're still in a bull market overall, that it's nothing more than a bull trap. Now, sometimes what happens is you'll get variations like this, right? Where it'll run up, it'll quickly drop back down again, and you'll still get that little tiny bull trap right on the way back down. So, I'm doing my best right now to give you guys a roadmap tomorrow. We'll kind of sift through the variations of this tomorrow in our trade room, right? But just be aware, sometimes you'll get more extreme variations of those, like you're seeing right on the left-hand side, right? Sometimes it'll run up, right? It'll quickly rip back down, and you're still looking at the same pattern. It's just we don't want to chase after it, right? Look for that again, that lower low in price, right? That trap above that high. All right. So again, we go up. Buyers once, buyers twice. It's the same basic idea. It's that failure at the edges. And then as we go lower, it's virtually the same exact pattern setup. We keep looking for those in this case, bull traps right above that high as we make our way down. Again, failures at the edges, right? Trap setups as we rotate back down to retest, again, the low of that trading range. And again, just like the S&P, we have a big bullish objective we are looking at here. A pop and pullback, right? A pop and pullback would be if we were to get that strong pop going up, I don't want to buy way up here, right? I want to now look left, start thinking about where we have these key support levels down here, usually be somewhere like this, right around these areas, right around the top of that triangle and around that prior swing, right? Think about that area as the pop and pullback entry location. So we pop up, we get whacked back down. You would think we get whacked back down because we're a range, right? Let them whack it back down, but now we have all of that bullish momentum. Remember, I'm not going to pick the bottom on this. Right? There's a very good chance it rolls all the way back down in, right? There's always that possibility in a range market, right? Ranges act like magnets. But however, if we start seeing now holding in this area here, if the bears come in and they're trying once and they're trying twice, where they're trying to go? They're trying to go back down that trading range, right? If they try twice now, I've got their stops. I got them right where you want them. Remember, anytime we see a strong move in one direction, we're eyeing a retest of that level. If I can get those bears trapped in off support, the key here is off support, right? Support being the top of that triangle, support being the 71.5 level. So pop, right, and pull back. Again, don't pick those bottoms. Rope those bears in, right? Trap them in and then run those stops. Ring that bell, as we say every morning in our trade room. And again, target's pretty easy, right? Back up to retest the high, leave that runner for that 16,173.5 because we still have not punched that ticket yet, right, around 173.5 level. So we know the market wants to go. Again, the easy money, right? The easy money right now is buying bear traps underneath that low. We'll see if we get lucky and get that pop and pullback setting up here for tomorrow. So the game plan's ready. Now all we do is we get back together tomorrow morning, 8 o'clock Eastern time. You know the market will throw some curveballs at us. It always does. We do our best to prepare the night before, but tomorrow we get together, we trade this stuff together, 8 o'clock Eastern time. I can't think of any better way to learn this than to do it with me every morning in our trade room. I'll put all the important links you guys need. I'll put the free video class links. I'll put the trade room membership links. I'll put Twitter feed stuff. Then the description. If you're watching for the first time right now, I would absolutely suggest start with that free video classes first. Learn the strategy, get your feet wet on that, and then it'll get you warmed up and ready to go. Hopefully sometime soon I'll see you trading along with us in our morning trade room with all the members. Questions, any issues getting access to the video classes, don't be a stranger. You can always call the office, send email, use live chat. If you got questions, if you have trouble getting into the video video classes. Definitely don't be shy. Reach out, ask for help. We're here to help out if you guys have help, if you guys need help along the way. All right, guys? Well, I'll tell you, a fantastic day today. It's been a great week so far. We get another big day coming tomorrow. Hopefully, I'll see you trading along with us tomorrow morning in our morning trade room. If not, we're back tomorrow night. Same time, same place, same back channel, right? We'll see you guys next time. As always, be well, be nice to each other, and you better be here tomorrow. Adios, amigos. Bye-bye for now.